Well, the Finance Minister, Pravin Gordhan, delivered his budget speech on Wednesday, but concerns remain that his measures may not be stringent enough to avert a ratings downgrade and save our economy. Economists believe that it might be only years before we can really still see the economy coming back on track. But here with me in studio today to discuss the country's economic outlook is Rowan Burger, the Managing Executive for Strategy and Market Developments at MMI Corporate and Public Sector. I'm also joined by Stephen Schultz. He's an economist and head of international funds for Momentum. Gentlemen, thanks for joining us. Stephen, let me start with you. We've been hearing these growth projections coming through from various agencies. Of course, we as South Africa have our own growth projections. Where do you think we're likely to see growth sitting at this year, taking into account the budget that's just taken place?
Sure. So, in fact, in the budget, Pravin revised the growth numbers from a Treasury perspective, and we saw the projections there come in at 0.9 for this year, which is pretty uninspiring. Yeah. He sees it accelerating to about 1.9% for the next 3 years, and that culminating in 2019 with 3.5%. Without sounding overly pessimistic, we think that those numbers are probably a bit of a stretch. So really? At MMI, we're looking at this year about 0.7. We don't see the economy accelerating beyond 1.5% for the next 3 years. And we believe that the potential growth rate for the country at present is about 2%. So a little bit less optimistic than the Treasury.
1.5% over the next couple of three years or so.
Correct.
They always say the next years are always going to get better.
Correct.
Rowan, let's talk about these growth projections. What are some of the hindrances? We've always heard South Africans stop scoring own goals, shooting themselves in the foot to get to past levels of 1.7, as Stephen says. What do we need to stop doing or start doing?
I think it's really tough out there at the moment. I think we've been talking about the mining cycle in the previous insert and the bad news that we sort of see there. Certainly when it comes to our clients, we're seeing a lot of retrenchments. So we're seeing a lot of companies under a lot of pressure. And a consequence of that is also we're seeing the South African consumer under pressure. So I think a number of years back, we were very much a commodity-based economy. And so we had the ability of the rand to sort of depreciate and to protect the sort of mining industry. We're not quite seeing that at the moment. And so we're seeing consumers under a lot of pressure. The one area that we did have growth was in government employment and government salary increases. We're all employed by the wrong employers when it comes to salary increases, but in the budget we seeing a freeze on the non-essential government sort of payroll. And I think that will continue to sort of see the South African consumers under a lot of stress. We're going to see interest rates coming in again, and so that's going to eat away at more disposable income. And so that other cog in the engine to sort of keep us going, the sort of consumer, is also going to come under a lot of pressure. And that's why I sort of echo Stephen's concerns in terms of our ability to sort of grow ourselves out of where we are at the moment.
You spoke about interest rates, Stephen. Before we get to the consumer, cost of borrowing, ratings agencies, was the speech enough? Because there's been some analysts saying, it's not a question of if, it's when. There was a note from RMB that said June, S&P might say, well,
yeah, so unfortunately I'm in a similar camp. So like many South Africans, I was slightly disappointed by the budget speech. I think, not to discredit the budget speech, it had a great tone. It was a very well thought out speech, but I think it lacked some of the hard numbers. And the context of what analysts and particularly the rating agencies look for, I think those hard numbers are incredibly important. So if we look at the big three rating agencies, I think Moody's, it's almost a near certainty. Moody's are perhaps the most optimistic on the country. It's very likely that they will downgrade us. Fortunately, that's not going to push us towards the junk status that we hear so much about. I think Finch in June will probably move us from neutral to negative. And then the real elephant in the room, S&P, who already have us on negative rating, I think as soon as June could downgrade us to junk status or non-investment grade. And I think it's a near certainty, if not June, by December.
Rowan, this means what for me as a consumer?
Well, I think we need to appreciate the difficulty that our finance minister had in terms of this being a year with local elections. And so it was very difficult to come out with the hard medicine that we really need to take. And I think we were all sort of expecting there to be some pain because we know the sort of situation that we're in. And we chose to kick the can down the road a little in terms of the fact that we will try and recover in years 2, 3, and 4.
So did we waste the crisis, do you think?
To some extent, but I'd really like to think that post the election, we have the ability to take some firm steps to actually resolve some of those issues. I think our current finance minister has a lot of credibility, and so hopefully he's able to follow through on these. But it was a great disappointment to us that there was the U-turn on the pension tax reform.
Let's get there. What are some of the things that, if you are contributing to a pension funding, you should definitely be aware of and you should have taken away from the budget speech?
Well, there was a protracted discussion in terms of we're trying to improve the retirement funding system for all South Africans. Ours is a complex system and it's expensive as a consequence, and so we're really trying to simplify the system. One of the key areas that we need to simplify is the taxation of contributions. So there shouldn't be a difference between pension funds, where you have to buy an annuity, and provident funds, where you can take a lump sum. And so the focus was to try and create a streamlining of these. The proposal was actually very badly communicated by National Treasury. It was that your future contributions you must buy a pension with. However, it became a political football because my pension is hugely emotional. And so you're taking my right to take my pension in cash, and it became this political football. And so very disappointingly, we turned around on what is a firm measure to improve our system, to align the contributions, which they have achieved, which I will touch on now, but more importantly, to stop us thinking about our pension fund savings as a daily pool of assets that we can access, but rather invest for the long term. And that will also have benefits for the country, because if we brought in the ability to or we force South Africans to keep their money in the right place, the 2 trillion that we have in the industry at the moment would actually be 6 trillion. So you can think of the investment that we can make in infrastructure, the much needed investments in toll roads, water treatment plants, sanitation, the likes of hospitals, schools. You know, we really need that money. And the other benefit would be that we could see our money at work. You know, you're in a small town, you've made your pension contribution, and you can see you built that bridge and you built that school with your money. And so all of a sudden investing becomes a lot more tangible. So I'd like to think we've kicked the can down the road again, that we will continue at NEDLAC to have these conversations. But I completely understand where Kusato are coming from. There is a broad need to fix our social security system because we have huge income disparity in this country. And so we really need to look after the poorest of the poor, and a social security system will achieve that. We need to understand the roadmap that we're on to try and address this imbalance, so that when we make incremental changes to the system, it's consistent with the future goal.
Stephen, I want to come back to you because you picked up on a couple of things. You need to see your money at work, making changes to the system. Of course, we have seen government and private sector coming together, reaching out to each other. We've seen as though they may be on the same page. Is this enough confidence for people to say, okay, things are going to be turning around here? Yeah, so I was actually saying to a colleague the other day, wouldn't it be ironic if the unexpected dismissal of Nene in December was the catalyst that brought us all back to the negotiating table? Yeah. And certainly we saw a very intentional effort by Pravin Gordhan during Wednesday's speech, reaching out to business. I suppose acknowledging that it's not a government effort alone, but rather he needs to be met by the private sector to repair the country. So I think there's a very constructive change in rhetoric that we're seeing out of government, but unfortunately at this point it's still planning, and it's just an intention. Once again, it's the hard numbers, it's the measurable efforts, and with government, it's our government, like many governments in the world, are very good at planning, but it's implementation that we get caught up on. So it's really the implementation that's the key to success. I've got a few seconds left, so I can just get a closing comment from you, Rowan.
Well, I mean, I sort of echo what Stephen's saying. It's not a lack. The problem is not a lack of capital; it's bankable projects. And that's really what we need. I think you see a lot of corporates sitting on a lot of cash. You see pension funds that have shipped all of their money offshore. And let's hopefully build this public-private partnership together, that we sort of invest in the country rather than paying salaries and grants, but we're giving people jobs, meaningful employment, meaningful skills that gets us back into a virtuous circle rather than the vicious circle that we're in at the moment.
Public-private partnerships, I'm hearing government, business. There's one other stakeholder that's missing though, Labour. So we need to be hearing from them too. Thank you so much. That was Rowan Burger, the Managing Executive for Strategy and Market Development at MMI Corporate and Public Sector. And of course also Stephen Schultz, Economist and Head of International Funds at Momentum.